Good morning. Thanks for joining me at Coffee with Kory. A lot of you guys know that the way I got into selling real estate in the first place was by purchasing investment properties. And I tell you, through the years, I've just found that it's a great way to be able to accumulate wealth. And I've sold investment properties to a lot of friends, a lot of clients, and several of you have mentioned, Kory, you should really talk about purchasing rental properties when you do Coffee with Kory. And so here we are. Today is the day. I'm only going to touch on one term. I've done a few recordings of this, and I found that I have a tendency to get in the weeds too much when I start talking about investment properties. So I'm going to try really hard not to do that. We're going to keep it at a high level. We're going to touch on capitalization rate, or cap rate. The only thing cap rate does is it allows you to be able to really compare investment opportunities a little more easily, because it doesn't take into account what the interest rates are on loans. It doesn't take into account what you're going to put down for a down payment when you're purchasing a property. It really says, okay, this is the amount of rent that I expect to collect over the course of the year, and these are the expenses that I have with the property. The primary expenses are real estate taxes, homeowners insurance, any utilities that you're paying on the property, any management costs if you're paying a professional company to manage it. And then the two big ones are maintenance expenses and vacancy expenses. And those are the ones, if you've got an investment property that you're purchasing that's already been an investment property, well, then it's a lot easier to kind of get your arms around, okay, what are my maintenance costs and what are my vacancy costs, because you can look at what they have been for the prior owner. If you're purchasing a property that hasn't ever been an investment property or a rental property, it's going to be a little bit harder to analyze those things. And so that's where you want to rely on your real estate professional to be able to help you analyze those things, what's been going on in the market and that kind of thing. So when you take you take your rent, you subtract out all those expenses, you're left with a number. So that number, I will give you a little bit of an example here just so that we can kind of run the math backwards here a little bit. I did an analysis for somebody this last week, and that number was $18,000. That's what they made at the end of the year after rents collected, took out the expenses. It was $18,000. The seller was asking $300,000 for that property. So that would be a 6% cap rate. Now, with newer properties, sometimes that cap rate is going to be low. I mean, it might even be 4 or 5%. With some of the older properties or properties that you've got a little bit more effort that you're going to have to put in as far as maintenance, maybe finding tenants, that kind of thing, you're probably going to want a little bit higher cap rate. Those could be 8 to 10%. But it really kind of comes down to the individual investor of going, okay, how much am I willing to put into the property from a standpoint of, again, effort, costs to maintain the property, that kind of thing. And that really kind of helps dictate what kind of cap rate am I willing to accept. So again, it really allows you to put things on a little bit more of a level playing field. And if you are just getting into investment properties, you're also going to be looking at it and going, okay, it's great, Kory, that you're talking about all of this investments without bank loans, but that's a real thing. I mean, most people are not paying cash for their investment property. So there's other terms that we would get into if you give me a call and we start trying to analyze properties. We're going to look at more than just cap rate. We're going to also look at like cash on cash returns and some of those kind of things. So maybe that'll give some of you guys, oh my gosh, what does that mean? I need to Google that. I would encourage you to do as much research as you like before we get together and talk about investment properties, but this just kind of gives you a little bit of an overview. So that's the jumping off point with investment properties. I really appreciate you guys tuning in to listen to those with me. I won't go into great detail on any of my conversations this week, but I've got to have a lot more fun conversations with a lot of you, and I really appreciate it. And I felt like I wanted to wrap up today's Coffee with Kory with a little nod to my good buddy Tim Scott, and I know I referenced this quote from him a few months ago already, but people are my drug, and I really appreciate all of you guys fueling the fire for me this week. We've had a lot of good conversations, so I hope to continue having those with you, and then also next week here if you'll join me on Coffee with Kory.